Federal Reserve Chair Jerome Powell has signaled that lower interest rates are on the horizon. In a speech at the annual gathering of central bankers and economists in Jackson Hole, Wyoming, Powell said, "The time has come for policy to adjust." The Fed is expected to cut interest rates for the first time since 2020 at its upcoming policy meeting on September 17 to 18. Markets responded positively to Powell's comments, with all three major indexes ending the day higher. Inflation is down substantially from the 40-year highs of 2 years ago, and the labor market remains strong. The unemployment rate has remained steady, and wage growth has cooled substantially over the past few years. Despite some challenges, a soft landing is still possible, according to Powell. Consumer spending remains a key driver of the U.S. economy, and the Fed is paying close attention to the health of the U.S. consumer. Powell attributed the progress in taming inflation to the unwinding of pandemic-related distortions to supply and demand. The U.S. economy has experienced a welcome burst of productivity growth, which strengthened growth without stoking inflation. The job market's cool down to a more normal state has also helped ease some upward pressure on prices. Job openings, a proxy for employer demand for workers, registered at 8.2 million in June, down markedly from the record high of 12.2 million in March 2022. The Fed has indeed seen some substantial progress in taming inflation, but a soft landing still isn't guaranteed. The economy could hold up, or it could take a turn for the worse. Most economists aren't expecting a recession this year, but economic forecasts sometimes don't bear out. That's the latest from the Federal Reserve. We'll continue to monitor the situation and bring you updates as more information becomes available.